For Global Business Update, Michael Wilson joins us now from London. Good morning, Michael.
Morning. A very, very volatile day as far as Asia Pacific stocks are concerned. Hong Kong stocks very volatile indeed. Mainland China markets continued to slide. The Hang Seng, though, has recovered very, very slightly, up almost 1%. But the problem was it was Chinese tech stocks in the United States and the Hang Seng index, they dropped sharply, basically because and also the China's Shanghai Composite reversed its direction. It fell an enormous amount. It's now up about 0.75%. The reason for all this volatility, I think, is due to investor worries about where China's actually going, given the end of the Communist conference over the weekend, and the fact that no great ideas about the economy were given there. There are plenty of ideas about political cadres and all the rest of it, but not about the economy. And however, it should be said that the drop in things like Alibaba and so on may have been slightly exaggerated. That's what analysts are thinking right now. It's a very, very confused picture. So first of all, you had this big drop after the China conference, and now analysts are saying actually you shouldn't be too worried because the next premier, who's called Li Qiang, not the next president, but the next premier, oversaw stringent lockdowns in Shanghai and also managed to navigate through that. The problem, once again, I would draw your attention to the fact that everything disregards what's going on in the property sector right now. And again, Evergrande comes into the headlines now and again. Some home buyers have refused to pay their mortgages. So this is all continuing. So once healthy developers are struggling to repay their debt, and shares of Chinese companies, as I said to you, listed in the US dropped very, very sharply indeed after Beijing tightened President Xi's grip on the economy. So a very mixed picture. It's really what we need from China is some clear signals about where they're going with regulation and the rest of it. US markets await the big tech earnings today. Stock futures actually looked ahead to technology earnings, and from those we'll get some kind of clues about the US economy. Shares of Amazon slipped very, very slightly, but we're going to get Alphabet and Microsoft today. Meta Platforms reports on tomorrow, and followed by Amazon and Apple on Thursday. And I don't need to tell you, do I, that given their sheer size and market capitalization, any kind of move of those markets, those companies, has an enormous effect on the rest of the market and indeed on investor sentiment worldwide. Let's turn our attention to France in the EU, and it's entering the white gold rush. This is a company called Imerys, and what they're doing is they are supplying Europe with lithium. Lithium is essential for the emerging electric car market, and I'm sure I don't need to tell you that, and it's for batteries as well. The EU plans to stop the sale of new diesel and gasoline cars from 2035. So to the UK, and Rishi Sunak is the new Prime Minister. That was decided, that was given fairly quickly yesterday, succeeding Liz Truss, who resigned on Thursday. All Rishi Sunak now has to go is to go and meet the King, King Charles III, and then it'll all be sorted out then. That's the ritual which dictates that. He'll be the first country's Prime Minister of colour, and he won the role after Penny Mordaunt bowed out yesterday. He is credited with having steered the UK economy through the height of the COVID-19 pandemic and broadly seen as a relatively safe pair of fiscal hands. The sterling has neither moved one way or the other. It's just going steadily, but in 30 basis points in terms of long-term drop in the cost of government borrowing. a leading city boss, this chap Guy Hans, who runs a private equity fund, is saying that the UK is doomed, as he puts it, without a Brexit rethink, and is destined to become the sick man of Europe. A lot of people are saying, yeah, well, thanks for that. What we actually that's all water under the bridge now, if I can put it like that. Brexit's been done and decided, and therefore the country itself will have to move forward. But anyway, I quote it to you because he's a foremost business person within the UK. UK cost of living latest, the price of pasta, tea, chips, cooking oil. Basically, these are all basics. They've soared by, and vegetable oils up 65% on the year. Price of budget food items rose 17% as it comes, and inflation is an all-time high. There is relatively good news about gas prices across Europe. Now, we were very worried about those because of Russia deciding not to. Apparently, there are a wave of LNG tankers which are overwhelming Europe because they simply don't have the storage space. But they are anchored around the Iberian Peninsula. One's anchored in the Suez Canal. Some are anchored off northwest Europe. Some are in the Mediterranean as well. And this wave of tankers actually is waiting until they can actually find the space to offload this and bring it abroad. The EU gas prices have slumped to about $100 per megawatt hour. That's down from 400. It seems a lot, but actually, if you look back and see where it was about, before all the Ukraine-Russia stuff started, it was about 40 euros per megawatt hour. And finally, oil as a commodity, crude prices remaining fairly volatile. We got some fairly weak PMIs yesterday. China's COVID woes have not gone away. We look for clarity as far as China's concerned, and we're not exactly sure about what's going on in the United States. So for all those reasons, crude prices are remaining relatively volatile. That's the global view.
Right. Real quickly, Michael. The city banker that said UK needs to have a rethink on Brexit, is it not right? Because all the lies they lied to the British people about economic prosperity when Brexit happened. You remember Singapore on Thames? And the other lies about the UK being an economic hub, it's all a lie now. And this crisis has aggravated everything. Is that not the beginning of the UK's problem? Leaving the Eurozone, not being able to trade effectively, then its small size has shown as an island nation that it can't compete. That's one. Secondly, Rishi is coming in amidst many problems. Rishi will have to raise taxes like Lord Mervyn King was saying yesterday. How will he sell it to the people that already have austerity breathing down their neck? Secondly, we are waiting for his Halloween day, probably disaster or redemption when they release the fiscal papers. Thirdly, how is he going to marshal through the windfall tax issue that he supported? He said, let's leave the money for these people that made a lot of money. So these are uninteresting times for the UK.
Brexit, first of all, I quoted Guy Hans because, he is a leading businessman. I don't think he's right. I don't think the markets think he's right either. I don't think we should be revisiting Brexit, because if what that means joining the European Union again, then that would come at a considerable kind of cost, and that would take an enormous amount of selling. Basically, people are fed up with elections and they're fed up with plebiscites and all the rest of it. So I don't think that's a goer. I don't think there are lies being told. That's a fairly strong word for you to use, actually, lies. If you actually look at other countries within the EU. Look at Italy, for example. Look at France. Look at Germany. Look at Spain. Are those economies doing actually any better? And would one really want to be linked by them? Do we really think that they are? These are questions. I don't necessarily know what the answers are. But do you really want to be linked with weakening economies and weakening demand when you could be actually looking elsewhere? I think Brexit, such as it is done and dusted now. And I feel as though we ought to be moving forward. And I think most people actually think that. But you're absolutely right. A very, very hard sell to increase taxes and do all the things that Rishi Sunak actually says said during his campaign that he wanted to do. But I think that having seen, I don't think there's any doubt about the fact that we need growth and we need a growth in productivity. All economies do. I don't think there's any question about that. It's a question of when you actually do it. And I think what he's saying is we're going to dampen down on inflation first of all, and then worry about lowering taxes when all that's actually compete. So I don't think necessarily he's going to be. I mean, I think that's what his message is going to be, and I think the fact that he will portray himself as a safe pair of hands. Yes, about Halloween. I mean, this terrible American import that we all suffer from, something else to spend the money for the kids on and all the rest of it. But the headlines write themselves, don't they? Will it be a horror show? And it will be a budget, won't it? Fiscal event, forget fiscal events. It is a budget. There's no question about that. And it will be absolutely vital. And we'll be talking about that when it happens. But until then, he's got a few days to build a new cabinet, and B, give us some idea of what he plans to do with the economy. But he is being seen as a pair of safe fiscal hands, at least fiscal as in taxes hands, and also we're entering a period of financial orthodoxy. Whether or not you think that's a good idea or not depends where you come from.
Okay, the interesting thing I find about a statement by Guy Hans, the CEO of Terra Pharma, is that the UK may find itself very soon going to the IMF for help. And it was in that context.
No. Listen, let's get Guy Hans in proportion. You only go to the IMF if you have severe currency problems and you cannot compete on the global markets. And the global markets fear absolutely, completely about your liquidity. The likes of Sri Lanka lead to that. The UK will not be going to the IMF for help because it hasn't reached that stage yet. I can see why the headlines came from for Guy Hans and Terra Firma and all the rest of it, but I think we've dealt with that. The Brexit thing has actually happened. He's in the headlines. I quoted him because he's in the headlines. I don't think the majority of people believe it. And from what people have been saying earlier on the radio this morning, talking businessmen and women are saying no. We need to deal with things now. We know about the volatility. All we want is to have some kind of firm idea of where we're going. No, the IMF and all that stuff is a sideshow.
Okay. Well, it's good to be optimistic, but that was Guy Hans just expressing his own view. But I wanted to ask you, yes, now that Rishi Sunak, a fiscal conservative, is in there, what kind of cabinet do you think we should be expecting? Would we have people like Dominic Raab, coming in? Are we going to have Jeremy Hunt keeping his job now that he's already giving advice to the new Prime Minister and telling him to go ahead with interest cutting and all of that before the Bank of England meeting on November 3rd? But what kind of team are we likely to see?
Unfortunately, I think we're going to see a team which is dragged from people who've actually been there before. We're looking at safe pairs of hands now. It's like bringing on, we've tried the adventurous football team. That's not worked. Now we need the experienced players to come back. And so that's what I think is going to happen. What he does with Penny Mordaunt, I think, is going to be very interesting indeed, because she looks like she's been quite an accomplished leader of the House in the short time she's been there. Again, as far as the economy is concerned, he has got to work hand in hand with Jeremy Hunt, and yet his authority and his experience will probably overshadow that. So I would imagine that what we're going to see is numbers 10 and 11 Downing Street in lockstep with each other. Now, whether you think that's a good idea or not depends on where you come from in terms of your experience of democracies and the rest of it. But I think that's what we're going to see. I don't think there'll be much. He'll be getting together a cabinet and saying, look, this is what we need to go for. Are we all in agreement with this? We have to be in agreement with this. He's looking to heal the rift. And there's certainly rifts because people have been pulled one way or another. They've been through a number of leadership endorsements. They've been through 3 leadership elections. They've been through a general election. Of course, people are going to be thinking in different kind of ways. It takes a strong pair of hands to pull all these talents together and say, we're going to be only a government, a cabinet of talents, and that's really all you can do. I mean, this is a problem that exists in every democracy, doesn't it? That you bring people together and you say to them, right, this is where we're going. It's the same with a board meeting, isn't it? The CEO should be saying to the rest of the people around the table, this is where we're going. How are we going to get there? Any dissenters, the door's that way.
Okay, thank you very much, Michael.